And today, you are going to take that first step. In this series, you will go from having absolutely no knowledge to being confident in investing your money to prepare for the future. Now, just a disclaimer, this is not another one of those get-rich-quick videos. Why? Because those just don't work. Here's a little secret for you. Anybody can get rich. It just takes time. And I will tell you exactly what to do and show you how to do it in easy to digest 3 to 4 minute videos. I don't care if you're 12 years old or 62 years old. The stock market is for you, and I will show you just how easy it can be to understand. And at the end of this video, I'll tell you what 90% of people do that lose money in the stock market and how to avoid it. So let's begin. What is a stock? Simply put, a stock is ownership in a company. Think of a company as a big pie. A stock is a small slice in that pie, usually a very small slice. Companies vary greatly, but usually public companies have millions of stocks outstanding or stocks available to trade. For example, you see this small sliver of the pie, that might be what you own. Now, most likely you're not going to be owning 2% of a company because that's a very big portion. Anyways, when you own a part of this company, there are certain privileges that are associated with that. Some of the privileges that you get for being a partial owner of a company are dividends, voting rights if you own common stock, which is what we're trading, and access to annual reports. Now, don't worry if you don't know what some of these terms mean. It'll all be explained in future episodes. But honestly, you don't even need to know any of this right now. You're here for this. Why do we buy stocks? How do we use them? Well, to keep it stupid simple, we buy companies because we expect them to become more valuable. We expect that entire pie to get bigger. This is value investing. You'll see right here, we purchase 2% of a company today in this medium-sized pie. 5 years from now, the entire pie gets bigger, and we still own the same 2%, but because the whole pie is bigger, our slice is bigger. That's it. The entire value of the company went up, the value of our slice went up, and we made tons of money in the process. What do the 90% of people that lose money do? They aren't value investing. They find overpriced stocks, which is essentially an inflated pie. The pie is inflated for many reasons, but often because speculation of that company. And then the inflated pie gets popped and it shrinks. And people get caught up in this and they lose tons of money. So that's what we're not going to do. But don't worry if you don't understand that. That last part got a little complicated with talk of speculation. You don't even have to worry about that now. All we need to know, a stock is a portion of a company that you can buy. You buy it today, let the company grow in value, sell it at some future point, and make profit. That's all I got for you today, guys. If you have any questions, leave them below, and I'll catch you in the next one.